Good morning, everyone. Welcome to the room. Hope everyone had a good holiday weekend. As you know, trading futures does involve risk. It's not suitable for all investors. Information in the presentation is for educational purposes, not a trade signal service, not intended to be financial advice. A lot of good things happening here in the markets. We've got really, let me pull up a calendar. Talked about this a little bit in the video Monday. The next Fed meeting will be here on the 31st. So we've got the rest of this week and then 2 full weeks without with just kind of the usual news announcements, economic reports, stuff like that. And at the last Fed meeting, we do have the minutes coming out today, and Jerome Powell's been speaking a little bit this week, and I think he speaks again today and tomorrow. So barring any curveballs from the White House or things that aren't on the calendar, the market definitely has the momentum to make its way up to 3050s. 3058 is the actual negative 23% target on the daily chart of the ES, and that's coming back from the extension from highs up to prior highs. And the reason I was using that, or I am using that, is because after the very first traditional low to high drawing, we pulled back. We just about touched the 50, didn't quite get there, but then we really didn't make any sort of pullback to a traditional retracement on the way up. Instead, going from highs to highs, we were getting these smaller pullbacks, and then we kind of did that for a while and then reverted back to traditional low to high. And that's a lot of the times what you'll see. Side note, market breadth opening 6-1 and about 1700, and then a very extreme tick reading. I would expect that to kind of go down towards the zero line. And remember, these first 5 minutes of tick readings, nicey tick over here, I don't really count those into my day. So let's say we started here at 1400, moved down to the zero line, and then got a spike up to 800 in 10 minutes or so. That's what I would consider the high tick to be of the day. So we are gapping up, and we are gapping outside of yesterday's range. I'll be looking at the 5-minute play. But if we look at yesterday, it was a little bit of a gap down. I actually wasn't able to trade yesterday morning. That's why I had to switch the room to today. And the first 5-minute bar was fairly big, about 6 points. And when the candles, 5 or more points, it can lead to a little bit more of a I don't want to say chop or range bound, because off of this first 5-minute candle yesterday, it led into a nice trend. But you look at the next 3, 4, 5 bars, see how there's some longer tails, and those bars are also kind of opposing tails in the next two, a couple spinning tops, more like a bull flag. And so if you get in above the first 5-minute candle's high, you can get stopped out before it has a chance to really take off. And I think that was the case here yesterday. 68, yeah. On mornings or days where I'm not able to be in front of the charts, I don't like to go back and get too into the weeds and look at woulda, coulda, shoulda trades, because if you're not there in real time seeing it happen, it can be a little bit deceiving at times. So, but I digress. What I was talking about with a retracement series that goes from a traditional where you would draw from lows to highs, always left to right. So if your lowest point on the chart, if you're using a low versus using a high, as long as you're going from left to right to draw your retracements, that's going to give you the correct retracement drawing. So in this case, the most left point on my chart is a low. And so if I look here to highs, that pulled back to the traditional halfway back. And then when the next one does not, when it really rips, then you can go from highs to highs. And then what tends to happen is we might go one or two high to highs, and then we'll come back to a traditional low to high, and then eventually fail the series and come all the way halfway back, or in this case, all the way back to an extension low to high. So Stephen, in terms of the first 5-minute play, if this first 5-minute bar is small, like below 5 points, which it's starting to get fairly large, it would be worth it. We're already at about 5 3/4 points. So the reason that I am not a fan necessarily of the 5-minute play if the first 5-minute candle is very large is because it can tend to be sort of the pole of a bull flag like we had yesterday. If yesterday would have ripped really cleanly, you'd have a little bit more conviction, but in today's case, you could try it, but I might 6 points. I think I'm going to pass on it today. So I'm not going to take the first 5-minute play. And if it does go, then you should be able to get into a retracement. We are close to new highs though. I've got my drawing up to this fourth high, but I'm not, it doesn't have much weight. I'll talk about this retracement here in a minute once we get through. We are close to all-time highs, and that's a little concerning. If we go into new highs, we may not get that retracement like I just mentioned. So let's see how this plays out. I'm not in the first 5-minute play, and we'll take what we get here over the course of the morning. And you're not going to catch every move, and that's just the way it goes sometimes. But looking at the pattern of the 5-minute bar from the last few days, it led to a trend. So let me go back to the 5-minute chart. So what I'm seeing here is the first 5-minute bar led to a trend, led to some nice 50% retracements within that trend, but the first 5-minute bar itself, what followed that were 4 or 5 bars of sideways and enough movement, undulation to, if you put a stop above highs, perhaps tick you out before it ran. So that's how I kind of based my decision out. Okay, what's been happening the last couple of days? Is the first 5-minute play clean? Then that gives me more confidence to take it on the next setup. If this one rips, then what we can do, the high from the third is a 3001. The high from the fourth, which is not really put much weight on that, is a 3,375. When I go to the extended hours, you'll notice that the pullback comes very neatly down to the 50%, whereas when I was just prior, I had the extended hours turned off. That didn't quite make it to a 60. I think it came down to like 65, but here we have a nice clean pullback. And so I don't foresee us, I figure on the trading hours only, I'm considering that touched because the extended hours with last week being the way it was with the holiday, figuring it traded, considering that traded. So then the all-time high in the ES here is a 3006. So you could do a buy stop above 3006, but we'll see if we can get some retracements prior to that. So I'm going to turn off the extended again. Let's go back to that 5-minute. Yeah, a little bit like yesterday's second candle where we had a topping tail. A little bit of that here. Yeah, we've already gone. So when that first candle is really wide, it's almost like just like when the first 30-minute candle is really wide, it takes more of the market to move above or below that candle. Or in the same token, if a daily candle is really wide, has a big range, the next day, if we open up anywhere within the range, it's going to take a substantial move to break out of that range. Yeah, so if the first 5-minute bar is, we'll say, less than 5 points, and a lot of times we're talking like 3 points, like pretty reasonable size bars, 3 points, 4 points, then it gives you more, it's easier for the market to move above or below that 3 points. If you have a really big first 5-minute bar or a big 30-minute bar or even a big daily bar, it takes a lot more movement to go from the middle of a bar, if it's 40 points, to new highs. Half of that bar would be 20 points, versus if the candle is only 10 or 11 points on the daily bar, now it's only going to take, if the market opened up in the middle of the range, only 5 points, and boom, you're off into making a new high, breaking the prior candle's high or low. This gap up is kind of occurring at the start of an uptrend. I consider these last couple days a pullback to the halfway back. And so this gap up, does have a target at 30.24s. When we gap up and we kind of are close to a double top or near highs, I always do kind of pay attention or look for signs of tops, within the day, little double tops or high ticket highs, because there are a lot of pit traders and short-term traders that do try and fade retests of highs before we break into new highs. So if we were to put a horizontal line at the all-time high, anything below that is going to be tested in terms of putting a short below where I've got this horizontal line. We'll just call it the 3003, and we'll call it 3004. And anything above that, so it gets shorted into as long as we're below that. And then once we move above, now all of a sudden a lot of those stops get hit. Folks who are sitting on the sidelines saying, I want to get in, but want to wait for the right time, then feel like, well, I missed the move. We're going into new highs. I got to get in right now. Jump on board, chase it, and the combination of stops getting hit, new highs being made, and folks chasing really accelerates the market higher. And that's why it's really important to watch closely around highs and lows of the day, highs and lows, like here, all-time highs, because if we don't get that pattern of breaking into new highs and accelerating really quickly, 3,003, 4, 5, 6, all of a sudden we're up 10 points, then that shows that there's not as much interest in chasing kind of a free-for-all. So the only trade that I put on in the first 15 minutes is the 5-minute gap play. Other than that, I kind of hold off to get a picture of what's happening off the open. So what we can do here is come in and draw up the first few retracements. Let's see what our low was, a 93.75 was our low. So if we come in here, we can say, okay, well, the first retracement pulled back, just about touched its 50, but it made its way up to its negative 23 very nicely. And if we draw up the next one, we can say, well, this one moved sideways at its 50%, then broke its 61.8. We kind of came down here double bottomed, not the double bottom at the low for the day, but it did touch this double bottom here. So anytime a series of retracements breaks, so here's the first one, and then in this case it's just a 2 retracement series, then I like to come all the way halfway back from the initial anchor point up to highs. And so we say here to Robert's point, the 97.50, and that one did get a reaction and rallied, but it just came up here in double top. It hasn't broken out yet. Its target is at 3,003s. So using that first 15-minute window, we can glean some information about how the market's reacting, adhering to the setups. Notice here the first 5 minutes, kind of the first bar is tall, and then this next couple bars moving sideways. Kind of that bull flag that I was just referring to. Here we have sort of a secondary low to high. So this is the bigger halfway back for the morning, which is holding its 50%, and then we have a smaller off of that level. When we come up and we double top like this, and we're in a long, we're sort of at that inflection point to where we either need to break the 61.8 of the short to confirm the double top, or we need to break highs to confirm that the long is sort of on its way to the 3,002. This isn't a very large retracement, a 97.50 up to a 0250s, we'll call it. But it is the first halfway back of the day, the first full one, and so that's important to note if it holds at 61.8 or if it fails. 301 and a quarter could be used as a buy stop. It's not the all-time high, but we're kind of making this ceiling here. Even if sometimes I'll use 1 tick above highs and put my stop 2 ticks below lows. So basically a 3-tick stop essentially. So 3 ticks away from the entry, and the entry I would just use is 1 tick above highs. 3,001 and a quarter. I might try that here just to see. Nope. I didn't quite get it in time. There we go. One tick, 2 ticks in. There we go. Then what you can do, using that 1 and a quarter, just leaving the stop alone because obviously there's not really much room to tighten it at this point. Drawing up the next retracement and trying to use that 61.8 if we don't get a swing low. 50s. And this is that breakthrough highs and then immediate follow through that I was talking about just a few minutes ago. That's a good sign that we'll get some continuation. So the next retracement from the swing low to highs is a 3,000 3,050 would be that 61.8. Only if we go to the next larger one, I might trail each candle up here because we're at least with a couple contracts. So I'm going to put one stop at 3,003 just to knock out a little bit or lock in a little bit. There it goes. And then I'm going to use the 61.8 of the next retracement, 3,003/4. So it's a little bit away, but if we can move higher, then this swing low or a swing low could also be used. That there's kind of this balance between if you put on a trade and it moves 4 points, let's say, and you let that come back all the way to break even or a 1 point profit, are you better off? The question is, are you better off taking the 4 points off, locking in 4 points, and then coming back and trying to put on a new trade with a 1.5 point stop, which is obviously a lot smaller than the profit that you just took, while risking the possibility that it may not come all the way back and fill you. So you try, what I like to do is kind of combine the two with, when I put on a traditional retracement, I put a first target at 2 points. So now I'm going to use this swing low here, 3,250 for the last two contracts on this one. To combine sort of taking profit without taking it all off. So if you've got 3 contracts, you put on a trade, taking one contract off at 2 points to lock in a quick profit, but still good reward to risk, risking 1.5 and making 2 points on that first contract. And then the second contract, getting aggressive and tightening your stop if you do get a quick run so that you can lock in that 4 points. You don't know if it's going to stop at 4 points, 5 points, 2 points and reverse on you. It might rip up to 6 or 7 points, some of them. But the idea is, okay, let me see if I can get one of those contracts, if you got 3, to be really high reward to risk. And then let me keep that other contract on and be a little more conservative so that I can maybe get a 10-point profit out of that one. Maybe it comes back to 5 points, which is still good reward to risk. And if it goes to 10 points but doesn't pull back into a full retracement, or if for whatever reason I don't get filled, if I wasn't in a trade, well, then I'm already in the trade. I don't have any, the risk has been removed, and I can capitalize a little bit more. So I find that helps with the psychology as well. You're not always stuck trying to determine if you should trail your stop or just throw out a 4-point target on every trade and close out and then come back to it. So like here, we didn't get that big pullback, or we didn't get a pullback down here. So now 302.50s is a little far away. Let's draw up this retracement like this, and then I'll use 303.75. That way, if it comes back and touches the 50 and bounces, I hang on to those last two contracts. If it comes down and breaks through the 61.8, well, then I can come back here and draw a larger retracement and see if it makes a bigger pullback. But as of now, I'm fine with being kind of somewhat tight, but giving it a couple points of room. And what did we get to? We got to 306.50, so that's definitely a new high in the ES for trading hours. What was the all-time? And yeah, 306 was the overnight high. So the overnight's helpful because it can give you an idea of where the market may head. Like we traded to 306 in the overnight, but we didn't trade there in trading hours. And now we just did. Oh, let me move this up and use a 304 as the stop. Bring it up to the next high. Same thing. I'm just going to leave it at 304 for now. Don't really have any other major pullbacks. One candle, two candles. But we're already well beyond that first halfway back. It's negative 23 and it's 61.8. And so that's where going from highs to highs can be a helpful gauge, which in this case doesn't look very nice. It's 50% for an extension would be a 3,004.25, and that's unfortunately right where I've got my stop, 3,004. But I don't want to give it too much room and give back more than I need to. But I don't see any high ticks or any signs of necessarily being the high of the day. So let's see how it reacts at 3,005. And you're never going to pick, the absolute high. And there's plenty of times where I get out of a trade for 4 or 5 points and then it stops me out and then maybe dips a little bit beyond that and then continues or reverses, goes for another 4 or 5 points. The idea is to catch the meat of the move or to catch, a good R multiple of your risk and take what you can with containing your risk at the same time. Let's come one tick away. Will it come down and tick me out? We'll see. Looks like it. Broke the 61.8 without really another swing low to grab onto here. Like I said, though, that extension high to high, there it goes. Unfortunately, puts us right there. Could have dropped it down to like a 3,003, but I'm okay with that. the low of this 5-minute candle is a 3003 1/4. Sometimes I will use the low of the high bar as my stop. So market rallying up, making new highs, and then I just look at the low price of the prior 5-minute candle. In this case, it's a 3003 1/4, and use one tick below that. You can also use that as an entry. I'm not doing it here, but using one tick below the highest bar in a rally for a short entry. Yeah, the overall picture is definitely up here on the daily chart and the 5-minute chart. And given the gap up, breaking into new highs with some follow through, and if I go back to the 5-minute, you can see that kind of this is now the pole, and I would expect maybe a couple of candles that move sideways to make the flag of the bull flag, whereas yesterday the pole was really just the first 5-minute candle, and then we had our flag thereafter. 1, 2, 3, 4, 5 candles moving sideways, and then the next leg up. Today, we kind of had, I guess you could kind of say these two candles were a little bit of a flag, but then if you look at the first 30 minutes as a whole here, pretty much each candle made a new high except for the third one. And so with this dip below, one tick below its prior candle, wouldn't surprise me if we had a couple of sideways bars here, just to, for the market to digest the move. Yesterday's close in 82, and now we're trading up at 3005, so a little bit shy of 25 points. I like using extensions as reference points. I don't like them for putting blind limit orders at. So you can see if I would use the low of the day to highs, we're not making that full pullback, and that's why I would use a high to high extension like this. What else is there to pull from this? High today is at 54s, and not even really a relative high tick there. Breaths come down, but still pretty strong. We did break through the 61.8 of this extension. So here's the first halfway back for the day. It broke its negative 23, went to that target, and then went to its negative 61 target, and then went a little beyond that. If I were to use that anchor point near the entry to highs, came close to its 50. We can use that as sort of the reference. It's going to have a little bit higher target. Either one of these are, giving us a target above highs. Once again. But we could go into a little bit of a triangle here, kind of already are. And that's the triangle on the 512 is often is sort of the picture inside of the flag part of a bull flag. So you see the pole and the flag, you zoom in on the flag and the 512, and a lot of times that's where sort of the consolidation, the triangle range bound action is coming from. Anytime Jerome Powell speaks, it's definitely you want to be a little bit aware and make sure that you've got stops in place for sure. I think lately there hasn't been huge reactions to his speaking engagements, but those can always be curveballs. So doesn't prevent me from trading unless it's the actual Fed meeting announcement on the Wednesday afternoon. And on this move up, we're in new high territory with a target at 30.58s. The even larger target, like the weekly chart, has an even bigger target at 32.15, much longer term, but lots of room to move there. I'm going to draw up this short just to know that it's the opposing. So then we have the short above us, the long below us. You see this a lot. We kind of pinball back between the two. You want to be careful when you're between two 50s. But then once a 61.8 breaks in one direction or another, then you can either try and trade the next retracement in that direction or zoom out and see if there's some sort of larger pullback that we're coming into. But so far, the last Monday, last Monday was the only day I was around for last week. But the chart looked, I had good trade, one good trade that day, I think, and then one good trade this Monday, and the markets has good movement, fairly clean, somewhat easy to read. No, so I wouldn't use this 325 as a blind limit because we kind of stopped at the extension and then dipped a little bit. But you could use, if we form like a double bottom here, you could take a long off of 325. And a lot of times with the bull flag like this, you'll get one candle that kind of dips lower, forms a little bit longer tail, and then rallies. Technically, a 302.50 would put your stop below the 61.8. It's about as wide as it could get, where I'd be comfortable taking a limit order, but in this case, I'd like to see it make a little base here or double bottom or something at 302s, and then just take a smaller setup off of that. And this pullback here, I mean, these very, very tiny pullbacks on the way up are really all it broke. This, it's not a very deep pullback, but it's the deepest one we had on the move up. This swing low, like over here, this swing low is above this one here. Not really any high ticket highs or sign of a top. So not much to take in the short. You could have used, so you could have said this is a double top here and come down and try and take a short like that. But at the time this was kind of bouncing off the extension, so you'd be fighting the long. In this case, I still don't consider, I would consider this still in an uptrend. The full halfway back for the day would be that changeover, and that's 61.8. We'd have to break a 2999. Here we go. Let me draw up the next retracement to make sure we don't stop at that level. And then here we've got a 3,250.75. Real little guy. $3,075 is also the full halfway back, which is just below the 61.8. So you have a handful of spots where this market could pull back and stop at, but the full halfway back for the day is always kind of the big one. $375, $325. Here's that nicey tick, kind of makes those high ticks off the open, and then boom, goes straight at a 45 down towards the zero line. Looks like we might make it to the full halfway back here for the day. Also another one that I wouldn't just use a blind limit at. This one quite a bit bigger, the distance between the 50 and the 61.8. Not used to the not putting a dollar sign in. So my thinkorswim, I know a lot of people would say, oh, well, what is this profit chart that I used to have? I guess it was they were still pushing out to my platform because I've been using thinkorswim for so long, and they used to have that, but most new platforms did not have it, so they just did away with it last week. So new high in the SPX as well, not quite as high as the ES. Dow, SPY, Russell nowhere near. So everything but the Russell in new high territory. So I'm just going to get rid of all these, and we are at the halfway back for the day. Typically a bull flag, the pullback for the flag stays in the top third, sometimes in the top half. Yeah, the Russell is definitely, small cap stocks tend to move quite a bit faster, or they can lead the market. The Russell's definitely been the lagger in this rally, though, so I've been using, the S&P and the Dow have been sort of the strongest of the four, and the NASDAQ is starting to show its strength. But like if you look at this swing high compared to where we're at, the SPY is a little bit higher relative to its May high compared to the NASDAQ, which is just above a double top. And then the Dow, also like the SPY, but then if we come over to the Russell, we got a ways to go before breaking highs. All right, let's try this here. So this would be the most recent short. If we can come up and break this swing, or break this 61.8, by another tick would be nice. Then we get a 3,175. 3,002 would be this long entry here. Let's see what we get. Here's the little double bottom with a swing high in the middle. Yeah, 3,002 is my order, Stephen. And it did just get filled. But see how this is a double bottom at the halfway back of the day. If it fails, then we've got sort of a pretty serious trend change that would occur here, and could really see some good setups to the downside. But if it's going to go higher, like this is the point. This is where it would do that. So, and the reason that I don't just take it, like you could say, oh, well, if you would have used 3001, look, it traded cleanly. Well, they don't all trade that cleanly and stop right at a big halfway back for the day. So letting it get a little bit of a base, get some people on board. It is moving a little bit slow. It may come down and retest again, and I may get ticked out before. But if it's going to go higher, it's going to happen. This is kind of the last point for it to do that. And having already that winning trade off the open, no problem in taking a stab at it. So there it goes. Interesting. So we may have a bit of a reversal later in the day if we can't round out here at the halfway back for the day. I won't take too many retests here. So like I don't just sit at a 50% and just take 2, 3, 4 setups. If one takes me out, you want to kind of look at some of the swing highs and use those major swing highs as your kind of failure points, or your points at which we'd have to come and break up here this swing high before I would consider trying another long. The full halfway back, like the opposing short, want to know where that is, because if we rally and just stop at the short, then that's a real strong sign that we're going to come down and break this uptrend. But I don't want to just sit here and get chopped up and give back everything from that first trade. Pretty much a textbook little double bottom setup here, though. I would definitely take that again. Sometimes it can be a little bit challenging to strip away, like you can, rather than filtering your trades into, or grouping your trades by winners and losers, if you group them by good setups and bad setups, and not necessarily that a bad setup is a losing setup, but just a good setup that kind of meets the parameters, and then a bad setup might be something that rallied and stopped at a short, and then you came and took a long after a short traded. I consider that a bad setup, or maybe you make a little mistake, or just you miss a high ticket highs, and then you take a long right at highs, something like that. Those can be classified as bad setups. Then it becomes easier to, or becomes more beneficial and helpful to analyze the groups of trades. And you're looking at all double bottom setups, and looking at double top setups, and ones with high ticks at highs and low ticks at lows. So this 5-minute candle here, this guy, would be the candle that I'd consider a high of the low bar, because its low is the lowest pullback in this, lowest price in this pullback right here. So if we break and print a 3003, then there's a good chance of us rounding out and this being the low and being able to move up. And sometimes I will use, that high low bar, breakout method on the 5-minute chart as an entry. But so far here, we've just double topped at it. And that corresponds over right here on the 512. So looks like we'll get another test of the 50. Sometimes you just kind of build and build and build and touch the halfway back for the day 3, 4, 5 times, trade in a little bit. It's a little sloppy, up and down, undulating, and then eventually get a break. So that's why, like, if you come in and take every single retest saying it has to go higher, it has to go higher, and get so stuck in a directional bias, you can end up just getting eaten up. But the nice thing about sort of undulating or bouncing off of a 50% and then pulling back to it is you get very distinct swing highs forming. Let's see what some of the other stocks are doing. So you got Google and Apple both off their highs. Amazon, new high. Netflix has been pretty messy, not quite a new high. Facebook, also a new high. So kind of a mix on the FANG stocks. Now trading all the way at the 61.8. So this little slide that denied me of the long up here may just as well turn into a more significant pullback. So far still holding the 61.8, so I'm not going to throw it away just yet, but it's had 4 tries at the 50%. Opportunities for folks to say, oh, well, I like this market up at highs. Now it pulled back. This is a better price. Let me get in. And those folks not being there or not enough of them to push the market up. We get the first 30-minute marked. We're definitely back inside it. Yeah, kind of right in the middle of it. So the high was, it did print before we hit that first 30 minutes. Interesting. Typically fairly dangerous when we're inside of the first 30-minute range. Dangerous just in the fact that the trend up has now failed. So we should be able to come all the way down to lows. But we may make a pullback, something like this, in the meantime, where it looks like we're turning higher, but then we trade at the short, and that's what pushes us down. I don't really do a whole lot with inside. Yeah, the 9 o'clock bar being like up here, this this candle being inside of the prior candles high and low. In that case, I would just use the, not the inside bar, but the prior one. In terms of, I don't really use inside candles, though it's high and low for any kind of entry. Pretty very low tick readings, and perhaps we were, I think, was it Stephen who brought up the Jerome Powell, you know what when some of these folks are speaking, what kind of things, how does that affect the market? Well, he started speaking at the top of the hour, I believe, and the market has kind of gone into a little bit of a drift lower, breaking the morning's trend. Yeah, so anytime there is an inside bar, if I was using the low of the high bar, like the entry is off of the candle that makes the highest high. So if we have an inside, like 2 or 3 inside bars that follow, I still use the initial candle that made the new high as my trigger point. Because there's a lot of times, let's see if I can find an example, where we move sideways inside of a consolidation, kind of like this here. Like if I was looking for a reversal to buy above the high of a low bar in this pullback, I would use this candle here. These next two are inside, they're smaller, and it doesn't really make a definitive break until we break here. And this candle has the lowest low. If we come back, this candle is lower than the prior one, this one's lower than the prior one, and this one is lower than the prior one. And then these inside candles, sometimes what ends up happening, especially with like placing stops, if I was short, let's say for whatever reason I got short inside of this candle, my stop would be above the candle's high, and I wouldn't tighten it on the inside bars. The only exception is if we made a double bottom within that. And I can't think of any setups of those offhand. You know what? It's actually on the 512. It can be, I'm probably not going to have any of those today, though. But I think I know what you're getting at, David, and it's something that I do see a lot. Well, if I see it, I'll point it out. Yeah, the candles themselves, just a traditional candlestick, whether it's a daily chart or a 5-minute or a 30-minute. I mean, there's so much information packed in that about what's happening with the collection of traders, market participants in the candle, that you really don't need anything more than that. Here's a little double bottom, kind of off in no man's land here. We actually, is that the exact same 97 1/4? 96.75, but kind of a little bit of a triple bottom over here, not the low of the day, but an interesting little formation. This would be the next short, and that is above us. But this kind of pattern where we form a low, get a little bounce, pull back, and double bottom is, looking for those types of setups that occur at bigger support and resistance levels is, that's something that I look for. But like I said, what can happen here, we broke the 61.8 of the long, is we kind of make our way up to the short, and things look like, well, we're turning around, we're going back to new highs, but then we end up stopping or getting a little bit messy up at 3,002s, and then either sell off and form a bigger triangle, which is one strong possibility. You have this breakout, and this whole thing, like we gap up, we rally, we could put in a pretty big triangle for the next couple of hours, let's say, and then in the afternoon or right at the close, kind of break out around 3,000, 3,001, and then make a new push higher. Because a lot of times the market will make kind of a sine wave for the day, where you make a push up, you pull back, and then you kind of snake your way back up. So that's one scenario. I've got this short drawn up just as a reference point because it's the most recent swing high down to lows. Haven't really seen a lot or really anything set up nicely since that first the first long setup, or wasn't really set up, just the breakout above highs at 1.25 was really the only. After that, once we started selling off, haven't really had the little double bottom over here at halfway back for a stop. And again, good setup at support. I would take that one again, and then it's really been it. Take a peek at the NQ, see how that's looking. The NQ's got a double top up here, but has not made a pullback yet into a little bit bigger short. But it also broke its halfway back. Yeah, we could come down and close the gap. That's an 82, and that is definitely a ways away. It's the NQ, but the ES, it was about an 82. NQ just broke at 61.8 of the halfway back long. And then the Dow, basically same thing as the NQ, just broke its halfway back long and kind of a double top. Now this one did make a pullback to its halfway back short. Didn't quite see, here you have that conflicting signals where you've got the long in play and the short kind of just about touches as well. And the result is kind of sideways. We are within the first 30-minute range, even though we had a strong push this morning. It only took 30 minutes. And that first 30-minute bar encompassing the entire second bar. So it'd be nice if we could come down, get a move down to the bottom of the first 30-minute range, get some kind of low ticket lows, and either rally back up to the top of the range or actually break through it and then trade back down to the 82, which would be yesterday's close, unfilled gap. I wouldn't consider this a very neat double bottom here. And it kind of is, but what support are you sitting at? Well, there's not much here. You've got the double bottom from earlier this morning, but not enough. We'd really have to come up and break this swing high, take out the 61.8, and even then, you're only moving up to the short that is likely to trade first at 3002s. And on top of all that, being within the first 30-minute range, so 3002 is up here. There is room for it to go to 94s, so that's a plus. But haven't seen a lot of good movement or good follow through. Kind of a couple head fakes to the upside, fell down a little bit, and then not really able to follow through to the downside and make it all the way to the lows of the day yet. Yeah, middle of the range is tough, Stan, and you're definitely not alone thinking or feeling that when you're inside of a range, like the middle of it is where you get chopped up. Taking shorts at highs or longs at lows are your best opportunities, but trying to trade the middle where you may get a little bit of a move in one direction, but then it kind of falls back, and maybe it goes enough for a first target, but then kind of sells off. That's hard and is easy to get chopped up in. Back and forth we go. So coming into that 3,150, see what kind of reaction we get. But I have a feeling if we stop at that and then we draw up the long, we'll once again be stuck between the two and kind of be in that triangle formation. I'll draw here on the 512. So we pretty much tagged the 150s, and now you've got the short that's, we'll call traded. So then that means there's going to be some opposition against this long down here at 99s, 99 and a quarters. So when normally this would be a nice little setup, kind of a larger double bottom with a break of a swing high and a pullback, because it's in the middle of the range and the short traded first, you have to pass on the long, and then if whichever one breaks at 61.8, you can look at taking a trade in that direction, but we're still in the midst of the first 30-minute range. So then that kind of leads to more of this back and forth. And you break the 61.8 of the long, which means the short ends up having more weight, even though the long was a prettier setup. But again, the context of where we're at, higher low as it relates to the prior, lower high as it relates to the prior. So you get this triangle forming, and you kind of just have to wait it out. And as you get tighter and tighter at this 29.99 level, Didn't really make a following retracement short. There's a break of the lows from just the recent lows, not the lows of the day. Need to come down towards a 375. Which is kind of what the short here targets. Our first moderately low tick, 546, the lowest tick for the day. Keep in mind the month of August tends to be, especially the latter part, a little bit wacky, and it's been that way for 10 plus years. So I tend to trade pretty light through August and be very cautious. For whatever reason, the markets just get wacky, and you get some weird things happening. And then everyone comes back after the September Fed meeting and kind of light it up for the fall. Volume picks up and usually get some sort of a trend that develops into the month of December. So as we head into the kind of the latter part of the morning, I would watch for the market to come down here at the 93.75s, maybe make a double bottom here with a low tick, or dip below and make a low tick. If we break lows, then 82s is what I would target. There's our break. 1 ticks, 2 tick below, 3 ticks. So we went in 3 ticks below lows, and that is the negative 23% target. So the next short would be a 97. And that has a decent distance between the 50 and the 61.8 if it bounces here without a low tick. So I'd watch the 97, and then if we do sell off here, I'd watch for a move. Half of the gap fill would be like a 88, but 97 may be enough to take us there. We got some resistance back here. Would look like that. But we are at the bottom of the range, and again, the first 30 minutes encompassing the whole day. No low tick and no swing high until 97s itself. So good to be playing at the bottom and the top of the range. But today kind of a strange day. Started off pretty strong, nice little long, and then just kind of drifted down. Spent some time at the halfway back, but didn't get much of a reaction, and then kind of going into short mode, although still up almost 100 on the Dow for the day. So to the outsiders, it's the media all-time highs sort of thing. So perhaps just some profit taking and a little bit of a digestion in the new highs, but still looking good for longer term rally and to continue upward. Breaking into highs. Let's say we close today with this inverted hammer on the daily chart, and it's like a double top. Well, then we have the swing low at 29.65.75. That's a very definitive low, definitive swing low, just like back here at 16.75s. So breaking this swing low is where I would maybe look for a short, but on the daily chart. Otherwise, another gap up tomorrow or a move into new highs tomorrow wouldn't surprise me at all. So I think we'll leave it at that for today. Next week we'll resume on Tuesday at our regular day and time. And if you have questions throughout the week, feel free to shoot them over. Tim@eminimind.com. Thanks everyone, and have a great rest of your day.